can say definitively that religions are all bullshit.
Welcome to Brainstorm.
We have the explicit tag for a reason.
This is a base level argument to a higher level morality.
I get paid to science?
To science as much as one can science.
What the hell was my point?
Trigger warning. The Brainstorm podcast will criticize your most cherished beliefs. We attack nonsense in all its forms and discuss difficult subjects. If you peddle pseudoscience, supernatural woo, or religious dogma, then this is not your safe place. This is the home of hardcore skepticism.
Okay, so welcome to the Brainstorm Podcast, Skeptic Studio. I'm Cory, and your name is Jason Bloomberg?
That's right. Mm-hmm.
And you recently wrote an article for Forbes magazine about Bitcoin and 7 lies that Bitcoin fans tell themselves. So first, I guess a good place to start would be, what's your background and how did you learn about Bitcoin?
Well, I'm president of Intellyx, and we're an industry analyst firm focused on digital transformation. So we do quite a bit of writing and research on disruptive trends in the enterprise IT market. So we're always looking for those disruptions. So the broader Bitcoin story, that is cryptocurrency, blockchain, Bitcoin, are all part of the story. And so I've been writing about the whole area, the crypto hairball, as some people call it, for I don't know, 3 or 4 years now. So So the latest article, the 7 lies Bitcoin fans tell themselves, is the latest in a series of articles, but by far the most popular. It just something. It's the timing or the wording or something, and it just exploded and got over 460,000 views.
Holy cow!
Which is like more than all of my other articles combined. So it's but it's not. In terms of my writing, I've been working on this for a while. From the perspective of enterprise software, right? So from the perspective of the enterprise, they're looking for solutions to business problems. And in that context, blockchain could very well have an important role to play. At least a lot of people think it does. And then Bitcoin is essentially the first proof of concept of blockchain, but it has taken on a life of its own. And so, I just enjoy poking my stick at it as part of what we do here at Intellyx. And
Nice.
so that's sort of how the story got rolling. It was really more focusing on enterprise software and then blockchain and how that fits in, and then Bitcoin as part of the blockchain story.
Okay. So I guess for the uninitiated, what is Bitcoin and blockchain technology?
Well, blockchain technology essentially is a distributed ledger technology. So instead of having a centralized clearinghouse for handling transactions, so if you use your credit card, it'll go through Visa and it'll go through your bank, or if you're exchanging money or something like that, there'll be a centralized clearinghouse. The idea with blockchain is to have a distributed transactions, so distributed ledgers where you have multiple parties and a cryptographically secure way of interacting, so that all of these parties can essentially agree amongst themselves on the state of every transaction. So you don't need a single centralized clearinghouse, and nobody has to be in charge, right? You just have to have most of the people participating agreeing on the specifics of the technology, and then if somebody wants to execute some sort of transaction, then all of these distributed nodes can complete the transaction and agree on the state of the transaction. So it could be blockchain could potentially be used for many different things, including cryptocurrency, of which Bitcoin is the most popular. So Bitcoin specifically is not just a way of executing distributed transactions, but is actually a store of value in and of itself. So because of the technology constraints built into the Bitcoin system, there is a fixed number of Bitcoin available, and it's going to max out at about 21 million all told over time. But in the meantime, there's only so much available. And whenever you have any sort of commodity with a limited supply and increasing demand, then the value will go up. And so that's what's been happening over the last several years, is the value of Bitcoin has been going up because the demand has been going up and the supply is essentially artificially constrained. It's constrained by the technology. So that's essentially what's going on. But you may ask yourself, well, okay, there's still something missing to the story. And what's missing is, where is the underlying value, right? If you are speculating on a commodity like steel or corn or pork bellies, or there's some sort of underlying commodity there that has value. Right? Somebody wants the corn, and that's why there's a market in corn or corn futures or whatever it is you're doing. Well, not so with Bitcoin. There is no underlying commodity, right? There is only the speculative value of Bitcoin. The only value that a Bitcoin has is the fact that somebody else may want to buy it from you. And that's it. There is no other value. So as a result, we have this increasing speculative bubble that is really based on nothing, right? Unlike the dot-com bubble, where there were stocks that represented real businesses, or even the tulip bubble in Holland in the 17th century, 16th century, there were actually tulips, right? But with Bitcoin, you don't even get a tulip for your trouble.
So you get nothing for Bitcoin? Like, is it just, like you say, it doesn't even really exist except in digital form?
Yeah, it only exists in digital form, and you can exchange Bitcoin for fiat currencies. And a fiat currency is essentially the Bitcoin fans' way of talking about real money, right? So right. U.S. dollars or euros or some other, liquid currency that is, that is backed by the full faith and credit of some government organization. Bitcoin does not have that, right? It does not have the full faith and credit of anything, right? There is no commodity. There is no gold standard. There is no nothing. Nobody is promising that Bitcoin is going to be worth anything. So you don't have that. But so you have the ability to exchange Bitcoin for real money, and there is a limited ability to buy actual goods and services with Bitcoin. But that's rather limited. I mean, there are a few sort of coffee shops here and there, and there's a few Bitcoin ATMs that will dispense real money. But that is a very limited relative to the speculative action that's taking place. So really, the vast majority of what's going on with Bitcoin is sheer speculation.
Okay. What is, you mentioned cryptocurrency before. Huh? What is a cryptocurrency?
Okay, so this is an important point, that Bitcoin is really one of many cryptocurrencies. So cryptocurrency is sort of the more general term. Bitcoin is the most popular. Ethereum is the second most popular. But there are hundreds and hundreds of what the community calls altcoins. Altcoin as an alternative coin, alternative to Bitcoin. So everything but Bitcoin is an altcoin. Okay. And so you have hundreds and hundreds of them. And they all have sort of different characteristics. Some the transactions are easier. Some are more confidential, and other so and all of them have some sort of extra little added value. And so all of them now are also speculative vehicles, right? So a speculator, don't call yourself an investor, because investors invest in commodities with value. So that's one of the confusing points. These aren't investors; these are speculators. They're investing solely in the possibility that whatever it is they're buying, they can sell to some greater fool for more money. That's the only value there is. And that's true for all of these cryptocurrencies, whether they are Bitcoin, Ethereum, or one of the hundreds of altcoins that are out there now.
Interesting. So I guess one of the defenses that I've heard from coworkers and friends that are interested in Bitcoin is that you can actually watch your Bitcoin value go up on your computer screen. So what are they getting when that happens? Are they earning real money?
Well, this is the nature of speculation, right? The value of a Bitcoin, the market value is defined as whatever a buyer is willing to buy an asset for. Right. So if you want to sell your house, the market value is whatever a buyer is going to buy it for. If you want to sell a block of gold, the market value is whatever somebody's willing to pay you for it. Right. So Bitcoin has market value, and that is what is being tracked. Market value, though, in the case of Bitcoin, is based entirely on speculative value. That is, it's entirely based on the greater fool theory, right? That is, you're a fool for buying it, and the only reason you're buying it is you hope that there is a greater fool who's willing to pay you more than you paid for it in order to take it off your hands before the entire house of cards comes crashing down around you. And that is all that is going on, right? That is it. Right, is the greater fool theory, and it's like this reverse game of musical chairs where you have to get out of the circle of people wandering, the circle of people going around the chairs before the music stops, because when the music stops, all you have left are the losers, right? So it's musical chairs where instead of winning, you lose at the end, and if you get eliminated, then you can win. So there are some people making some money on Bitcoin because they are selling before the bottom falls out. Right. And as a result, you have stories of people who've made money on Bitcoin, and those stories are driving further speculative interest. Of course, over the last couple of days, the value has dropped precipitously. So is this the end of the bubble? We'll see, right? It could be, or it could be people just taking profits before the holidays, and then they'll just jump right back in. So, it's hard to tell. You never really know if a bubble pops until after the fact.
Yeah, it seemed almost a little predictive. I was talking to a guy at my job, and he said he invested $3,000 into this Bitcoin company, and then 2 days, and I said, only deal with whatever risk you are willing to lose. That it makes no sense to go too deep. And then 2 days later, he came to me with a frown, and he said, I lost 80% of my money in these last 2 days. I don't know what. So is Bitcoin used? I saw there was something called UTC or something, some company that you were buying with Bitcoin, and then the value of the company goes up, and that's how you earn. Is that?
I don't know if UTC is the right acronym. Are you talking about ICOs, maybe?
Oh, maybe.
So we need to talk about ICOs. I don't know if that's where you're going, but an ICO stands for an initial coin offering. And ICOs have also exploded over the last year or so. And they've been around for now, 5 or 6 years, but there was very little interest until just recently, last year. And now all of a sudden the interest is exploding. So an initial coin offering, or ICO, resembles in some ways obtaining venture capital funding for a startup, or it resembles in some ways going public, where you now take your stock and you make it publicly available. So it's similar to that, but it's different in many fundamental ways. So with an initial coin offering, some startup or other company, typically a startup, basically creates its own altcoin. Right, out of thin air, right? Just creates it and comes up with this strategy to offer some of it to speculators who can now buy that altcoin in order to fund the company, right? So now the company didn't have anything to start with. It takes this monopoly money that you can't even use to play Monopoly with, right? Prints its own money, right? Sells some of it, gets people, foolish or not, to pay them money for this fake monopoly money, right? The ICO coins, in hopes that whatever that business model is, once it takes hold, it will somehow imbue those coins with value outside of sheer speculation. So every one of these ICO-funded startups has some sort of story for how they're going to, change the world or do something or actually establish a real business that has real value, and somehow tied to those coins. So there's a whole variety of different business models. Everything from selling marijuana. I get PR pitches all the time from marijuana companies. Sometimes it's about rapid transit. So it's using them as tokens for riding the subway, or there's any number of different business models. But but keep in mind that these coins have no real value, right? They're just being created out of thin air, and only some of them are being made available for purchase. The others, many of those are simply being held by the founders of the company.
Okay.
Right. So this is how the scam works. Right. Let's say I want to make a whole lot of money, so I take my Monopoly box, take all the cash out of it, take 2/3 of the cash, and sell it to all my buddies. So now I get real money for that. Now I take that real money and I put it into my company, and somehow my company convinces the market as a whole that all of the Monopoly money I have is worth something. So now all the Monopoly money I still have in my pocket is now also worth something. And so down the road, I can sell it and retire. And that's how it works. So the theory is that, and perhaps it may be true for some of these companies, that they'll be able to do something that is of sufficient value to actually drive real value of the altcoin that they're creating. But my guess, in my opinion, 95% or more is really just smoke and mirrors. And there are some true scammers out there, and some of them have already been caught.
Yeah, I have heard it compared to like multi-level marketing organizations sometimes, where you're selling the idea for this value or whatever, and then the people below you have to sell the idea to somebody else.
Yeah, I mean, there are similarities to a number of other scams and related business models. The similarity with multi-level marketing, it isn't necessarily that it's multi-level. It's that with multi-level marketing, there is some sort of real product there. Right, you can get your Nutrisystem shakes or whatever, or your Amway makeup or whatever it is. But if you go to one of the meetings, that is only sort of like an asterisk. Oh yeah, we have real products, which makes it legal. But other than that, the real money is in building a downline, right? And that's the MLM thing. Get signing more people up. And if you want to be a vice president, you just have to buy $2,000 a product and stick it in your garage. Right.
Yeah.
And that's where most of the product goes. It gets stuck in garages of people that don't know what they're doing. So, but there is no downline necessarily. I mean, obviously, you could have an ICO-funded MLM, and I'm sure somebody's coming up with that. Yeah. But that's not necessarily what it is. Okay. It's also similar to a Ponzi scheme, right? With a Ponzi scheme, there is no real value, but rather investors or supposed investors are really just marks. People who think they're investors can get their money out, but really the only way they get their money out is if the con man is actually taking investments and paying other people when they want to come out. So it gives you the illusion that there's real value there. If you remember the how Ponzi schemes work. So it's similar to that as well, but it's not really a Ponzi scheme either. And this is one of the challenges with this whole space is it's not very similar to anything that's come before. So it's not exactly like the dot-com speculative bubble. It's not exactly like a Ponzi scheme. It's not. So a lot of people make fallacious assumptions that it is similar to something familiar, and as a result, they can draw conclusions as to how it works. And this is one of the things I talked about in the article, is that this is the fallacy of false equivalence, that it's similar to real money, so we can treat it like real money, but it's not. It has some things in common, but it's more different than the same as any of these things. And so it's hard to really get your head around it, because the human mind gets the head around new things by comparing new things to things that are familiar, and then making assumptions that the new things are like those familiar things. Right. And that is very difficult to do with this whole subject.
So I guess you mentioned the article. I guess we've almost kind of covered a few of these, but I wonder, is there anything that you've heard people saying about Bitcoin that isn't a well-known kind of assumption?
That isn't a well-known assumption. Well, part of the Bitcoin, the way that Bitcoin works is the notion of mining Bitcoin. So in mining, is really a misnomer. It's a metaphor, and it is similar in some ways to, say, gold mining, but it's more different than similar, again. So you don't want to make the assumption that it is that much like gold mining. But with mining, what essentially mining is processing the transactions. So if you think about it, if you look at Visa or MasterCard, they have centralized transaction processing, and that's most of the value they provide is processing the transactions on behalf of banks so that everybody can use their credit cards, right?
Okay.
Move the money from here to there as appropriate, handling all the security and anti-fraud stuff that they have to do to run their business. And that's the value they provide to the market. Well, with cryptocurrency, Bitcoin in particular, there is no central processor. So all of these distributed processors, which could be anybody with some computers, can just volunteer to do some of this transaction processing, and that is called mining. The reason it's called mining is that the Bitcoin infrastructure rewards these transaction processors for completing transactions by giving them some previously unissued Bitcoin. So Bitcoin that hadn't been in circulation is now created out of the blue, out of nothing, and awarded to successful miners who have completed certain transactions and have also done some extra steps, solved some puzzles that wins them the prize of some Bitcoin. And as a result, it's possible to make money, or essentially make Bitcoin, by doing this mining, and the amount, and you also get a transaction fee, and the transaction fees are automatically calculated to make it worthwhile to do the mining. Right. So mining is now a business model in itself, and you can get a whole bunch of now dedicated computer equipment that is specially designed for mining, and you can join pools of miners so that you and a bunch of your buddies can get together and essentially share in a whole data center of mining computers that are now processing these transactions and creating Bitcoin and actually making money. That is, if you decide to sell your Bitcoin. But if you're just keeping Bitcoin, you haven't made any money. You just made Bitcoin.
Right. It seems almost like maybe my assumption is wrong here, but wouldn't mining Bitcoin decrease the speculative scarcity and therefore reduce the price of it?
No. This is fundamental to the nature of Bitcoin, is that there is enforced scarcity. There are only 21 million Bitcoin that will ever be available, right?
Okay.
So some of those have been mined, some of those are yet to be mined, but essentially it gets harder and harder to mine them as you get closer and closer to that number. Right?
Okay.
And that number is still decades off, right? So it sort of gets harder and harder, so we're sort of getting closer to it more and more slowly, and it's going to take decades to get there. And even if we get there, so the Bitcoin aficionados say, then the transaction fees alone will justify mining. Now, I have my doubts about that. I think that as time goes on, mining will become, at some point, will no longer become cost effective. Even today, it consumes appallingly massive quantities of electricity. Bitcoin mining uses more electricity than Ireland already. That's one
wow.
I heard.
I heard a story about a guy who rigged up his smart car so that every time he drove around or every time he refilled, it was using power, and he was mining Bitcoin by driving or something.
Yeah, I haven't heard that one, but one of the trends is using a botnet to steal processing from unsuspecting people on the internet to mine either Bitcoin or Ethereum. So this is now one of the criminal enterprises that is driving Bitcoin. And this is another story that is important to point out, is that criminal uses of Bitcoin and other altcoin are one of the primary drivers of the original speculative value. How did it get from being worth like nothing to being worth, over $10,000 a Bitcoin? Well, a lot of that ramp up is due to the fact that criminals have either found ways of using Bitcoin in their criminal endeavors or of simply stealing Bitcoin, right? So ransomware, if you've heard of ransomware, most ransomware hackers want payment in Bitcoin. Okay. It's also very popular for money laundering. And if you're on the dark web and you want to purchase anything from illegal arms to child pornography, guess what? It's one of the altcoins. Now, Bitcoin is not anonymous enough for child pornography and for, terrorist equipment and stuff like this. So there are even more anonymous altcoin like Monero that is now becoming the altcoin of choice for the hardcore criminals doing really nasty stuff, on the dark web, because Bitcoin, law enforcement has ways of figuring out who you are with Bitcoin. So where's the innovation going? The innovation is going toward what criminal enterprises want. Right? Criminal enterprises are driving the innovation in this space, and they have all along. And that's an important fact that a lot of people don't realize, that this is really primarily about criminal enterprise. It's primarily about money laundering, tax evasion, and illegal transactions on the dark web, which is everything, again, from child pornography to terrorist information to, I don't know what bad guys are into these days, whatever it is, right? Illegal drugs. And if we took all that away, if somehow we could wave a magic wand and take all that away, there really wouldn't be enough to support the speculative value. So that's really what is driving all of this is criminal enterprise.
How long has Bitcoin? How long has, I guess, cryptocurrency and Bitcoin been around?
I think it dates from the early 2010s. I don't have the specific date. I mean, anybody could just look that up. And this one person who is still anonymous, it goes by the pseudonym of Satoshi Nakamoto, invented this stuff. And we still don't know who that is. Right? There's a lot of theories. A bunch of people have been suspected. And if you go to his I say he because it's a male pseudonym, but we don't know. It could be male, female, or a group of people. A lot of people think it is a group of people. If you go to his webpage, there's a bunch of suspected candidates for who they are, who this guy is, but nobody has come forth and proven that they are Satoshi Nakamoto. A few people have come forth and have said they are, but their stories fall apart. So what's scary about this? There's a number of things scary about this. One is that this person, Satoshi Nakamoto, has a big block of the original Bitcoin, the first Bitcoins ever mined, and he's now like the 200th richest person on the planet now.
Wow!
Because it's like tens of billions of dollars of Bitcoin. Now the Bitcoin just dropped over the last few days, so it's less now, but so it's very volatile. But it's billions of dollars worth of Bitcoin. We don't know who it is, and he's never sold any of it. So we don't know what's going on. Why is that? Why? If you had $10 billion, and would you not do anything with it? I mean, who would not spend any of it? And this is really risky because obviously, if he were to try to sell it all at once, then the bottom would fall out, right? Because this is like the De Beers, diamond cartel. They hold most of the diamonds ever discovered, in their secret vaults in order to prop up the price. Obviously, if they decide to change their mind, the price would bottom. And with diamonds, and same thing with Bitcoin. So there's one guy, presumably, who has the power to crash everything, and has only not been doing it for reasons that we can only guess at. And so it's a scary thought. Has he been paying his taxes? Well, no.
Probably not.
Probably not. Most people, the IRS has decided that Bitcoin is a commodity, not a currency, which means that if you sell any, it's a taxable event, and you have to fill in a particular form. And the last time I saw the statistic, which I think was 2015, it's like a couple hundred people had filed this form out of hundreds of thousands of people transacting. So virtually everybody, according to this information, who has sold Bitcoin is now a tax evader. They haven't filed the appropriate form. Now, so that's in the U.S., of course. It didn't apply other rules in other countries. But so one of my predictions for 2018 is that once April 15th passes and the IRS sort of gets an idea who's filing, who's been filing that they've been selling Bitcoin, I think they're going to do this massive dragnet, and they're going to arrest thousands of people. Right. That's what I would do. I was the IRS. Serious. Yeah. I mean, all these people, they're using it for tax evasion. If you buy Bitcoin, you sell a Bitcoin, you have to file this form.
Right.
Every single time or the form has to have every single transaction where you sold Bitcoin on it.
I heard somewhere that there's apparently a system in place that prevents people from reselling Bitcoin that they've bought. Or not, but so that the same Bitcoin can't be sold 2 or 3 times.
That's what it is. That obviously was one of the the first problems that Satoshi Nakamoto had to solve, the double spending problem. Right? You can't, if you have a digital currency, so you have some sort of digital representation of value, and you want to exchange it or spend it, you obviously can't have it anymore. Right, but this is not the way information works, right? If I have a paperback book and I give it to somebody to read, then I don't have the book anymore.
Right.
But if I have a digital book and I give it to somebody to read, I might still have the book. Right, it's digital.
Yep.
Right. So making copies takes no money and no energy. It's just it's something we do. So that obviously had to be solved first. Now the question is whether or not it's truly solved. Right, and it's hard to double spend Bitcoin because all of the different nodes that all these miners, these transaction processing nodes, have to have a consensus on what happened to that transaction. So person A gives person B some Bitcoin, then it only that transaction only really takes place if most of the nodes agree it takes place. And then if that person A tries to spend the same money again, well, it's not going to work because the nodes say, wait a minute, that money's already been spent. So that works pretty well unless, of course, a lot of the nodes are controlled by a bad actor, right? Because essentially, who decides what the rules are? Well, it's a majority of the miners, right? And so,
right, yes,
who is in the majority? Well, it could very well be the Chinese miners, right? China, not necessarily the government, but Chinese miners who may or may not be affiliated with the government itself are becoming increasingly dominant players, in large parts because they have government subsidies for their electricity costs, right? So if you can get free electricity from the government, that may all of a sudden makes it a whole lot more profitable to be a miner, and as a result, an increasing number of miners are Chinese. And if all the Chinese miners decide to change the rules favoring Chinese miners,
right,
then really there's nothing anybody can do about it, right? Other than split all the Bitcoin into two different Bitcoin. They call it a hard fork. So instead of having one Bitcoin, you have one of some other kind of coin. And this has happened a few times, right? So we have these other kinds of coins that are split off from Bitcoin and have now their own speculative value. And it becomes increasingly confusing. And now instead of having one coin, you have two. So now you can spend two coins where before you could only spend one. So is that double spending? Well, technically no, because they're different kinds of coins. But right. You had one and now you have two. So it's kind of like getting a dividend.
Right.
But not really. Again, it's not really like anything we've done before. It's not really like a dividend. It's just it has some similarities, but it's really a different kind of thing. It's like, we have dollars and then the U.S. government says, well, we're going to issue, dollars version 2, and everybody with a dollar version 1 gets a dollar version 2. And they're also, you can also spend them. Well, now what? I mean, does that mean that does everybody have twice as much money as they had before? And that means just the value of every dollar just got decreased by 50%? Right. Yeah. It's less like splitting stocks. Well, it's a little like splitting a stock, but not really, right? It's not that much like, it's not like anything, right? It's a little bit like a bunch of things, but you can't say it works like splitting stocks. You can't say it works like issuing a new currency. When Zimbabwe had runaway inflation, so they issued a new kind of currency that had, it's different. It's not like that. It's just different.
Wow. It seems like the kind of thing that's ripe for people to take advantage of it.
Absolutely.
Yeah.
That's what a lot of people are thinking is, how can I take advantage of this?
Right.
And that's most of what people are thinking.
I think,
and some people are making money doing it. Right. And that just fuels the fire. But when all is said and done, most will lose. So I read a statistic once that 1 out of 8 people who go to Las Vegas to gamble leave Las Vegas ahead, about 1 out of 8.
Okay.
Right? 7 out of 8 come out behind, 1 out of 8 come out ahead. So obviously, the gamblers all hope they're one of the 8.
Right.
What you really do when you go to gamble is you're going for the action. Right, you're going for the enjoyment of gambling, and obviously part of the enjoyment is the chance of winning, but you realize odds are against you. Well, it's similar with Bitcoin, right? 1 out of 8 would be generous. 1 out of some fraction will come out ahead. Most will lose. And people don't realize, though, it is just like gambling. Well, in some ways, obviously, it's not exact. But, but most people will lose. And you can point to people who win and say, well, look, see, people are making money doing Bitcoin. That doesn't mean you're going to make money doing Bitcoin. And people also fool themselves into thinking that Bitcoin that they have is money, right? It's not money until you exchange it for real money, for fiat currency. And this is one of the myths as well, is that Bitcoin is money. Well, Bitcoin isn't money, right? Because you generally cannot use it like money, and it does not retain a stable value the way that stable currencies do.
Right. I can't go buy tires with it.
Well, even if you could, because a tire store might conceivably accept Bitcoin. Well, how many Bitcoin is a tire? Well, one day it'll be, one Bitcoin, the next it'll be 2, the next it'll be 3, the next it'll be half, right? And it'll change hourly, right? So it's not practical as a store of value. Right. And this is, it's only practical as a speculative vehicle, right? That's its only use, right? Because it's just not useful as a store of value. So this is something I'm going to write about in my next article. I mean, if you wanted to invent a cyber currency that was useful as a transactional medium for buying and selling things, then you wouldn't have enforced scarcity that would enable a speculative bubble. Rather, you would have enforced exchangeability with fiat currency, right? You would say, okay, I'm going to invent this coin that is always worth an average of €1 and $1 and a yen. Right. You come up with a formula, and so it's always stable with respect to however many, a basket of stable currencies. And so those currencies go up and down with respect to each other, but not all that much, relatively speaking, because these are the stable currencies I'm talking about. So if you average those and came up with a coin, so it was always predictable within that narrow band, that might be useful as a means of transaction. Right. But it wouldn't have enforced scarcity. It would have enforced exchangeability for fiat currency, and that's not what Bitcoin has. Bitcoin has enforced scarcity, which means that if you have a bunch of people who want it, the price goes up, and here we are.
Right. I recently read that there was approximately $70 million in Bitcoin stolen. So I wonder.
Happens all the time.
Yeah,
happens all the time, and part of this. This latest dip is due to a hacking of some South Korean exchange, and some god-awful amount was stolen. But it happens all the time. Bitcoin is appallingly easy to steal, and it is also appallingly easy to lose. You lose your password, you're screwed. There is nothing you can do. There is no sort of password reset company you can go to that can say, "Okay, sorry you were stupid. Here's your reset." Right. No. You lose your password, you lose your private key, you're screwed. It's gone. And a lot of Bitcoin is simply irretrievable because somebody lost something and now it's gone. And you can steal it. And with Bitcoin, there is a way to trace it because you can look at patterns of transactions on the blockchain. So the bad guys sort of have to worry about that. But there are altcoin that is not traceable. And so they're love to steal that.
No kidding. Yeah. It seems, yeah. So I guess if you were to advise somebody, would you advise them against getting involved at this point?
Okay, well, first of all, I need to say that I am not an investment advisor. Nothing I say is actually investment advice.
Right.
With that being said, stay away. If you have any, sell it, period. Well, that's not investment advice. That is just one buddy to another.
Yeah, for sure. Yeah, I just, that's the, like I say, a guy at work, he's about $300 in, and he keeps saying, oh, well, now in 3 months I can pull an extra $40 out of that. Is this going to last that long?
Or maybe 100, or maybe nothing. I mean, in 3 months, who the hell knows?
Right. Yeah, like there's no insurance or guarantees or anything on this.
No. Well, and there's two layers of that. There's no guarantee of future value. Obviously, that's true of any investment of any kind. Right. But there's also no guarantee that this whole thing is going to keep working.
Right.
This is one of the things that I've been pointing out as well. If the Bitcoin store of value crashes, the Bitcoin transactional infrastructure will likely crash as well. Right? Because the whole thing is running The only reason the transactions take place is because miners are executing them. So if there's a reason that if it's no longer worthwhile for miners to do that because the value of the coins has dropped too far, they're not going to do that. Right? They're not going to keep using electricity if they're not making enough money to pay for the electricity. Right. They're just going to stop. And if the miners just stop, then basically nothing happens. I mean, it completely evaporates. Right? Because the only reason you can buy and sell it is because some miners there executing the transaction. And the only reason they're doing that is because they can make money doing that. And they're making money by making Bitcoin that they can sell for money. So if that Bitcoin it doesn't have any value, then
yeah, there's no point in mining it. Yeah,
right.
For sure.
So this is one of the key. I'm going to write about this in the next article. Of course, the last one, the 7 lies that Bitcoin fans tell themselves and anybody else who will listen, was so popular. Obviously, you're going to have the sequel. 7 more lies that nice. Bitcoin fans, although it's Bitcoin and really all cryptocurrency fans. Because I'm going to talk about ICOs and some of the other things. So it's not just Bitcoin, but it's still going to be the 7 lies again. The same thing. So that's one of the lies I'm going to talk about. The lie is that betting on Bitcoin by buying Bitcoin is the same thing as betting on Bitcoin as a revolutionary new way of reinventing money. Right. There's a lot of people say this. This is money 2.0, or this is open source money, or we're going to take money away from the Fed and other centralized banks and give it to the people, or we're going to have some sort of libertarian view of money where there's no Federal Reserve, or whatever the view is, and they're betting on that by buying Bitcoin. But there's two different things, right? Because Bitcoin has value, and there's a certain story there, and then the infrastructure for cryptocurrency infrastructure has value as an infrastructure for conducting transactions that is separate from the value of the coins themselves. And people don't separate those, so they think they're betting on one by buying the other, when in reality, if one crashes, the other will crash. Now, this has never happened before in the history of commerce. Right? If you think about the tulip bubble, back in, I think it was the 17th century in Holland. Right. All of a sudden there was all this craze over tulips, and so certain tulips were worth more than a year's salary, and then everything crashed. But what were they buying tulips with? Well, it was gold and silver, right? They had gold and silver coinage. That was the currency of the day. Gold and silver transactions, that you would use to buy bread or, hire a ship or whatever, those kept on going, right? Right. So the tulips lost value, and some people lost their shirts and ended up with a handful of tulips for their trouble. But the mechanism for conducting transactions was just fine. Right? The tulip bubble crash did not impact buying and selling stuff with gold coins. Right. Right. Well, when Bitcoin crashes, the ability to buy and sell stuff with Bitcoin will also crash. Right. That's never happened before. Right? You look at the dot-com bubble; it crashed. That doesn't mean that buying and selling stocks didn't work anymore. Right? You could still buy and sell stocks. NASDAQ didn't go out of business. Right? It kept on doing what it always did. It's just the value of certain stocks dropped. Right? And you could still buy them until the company went out of business. You could still sell them. It's just there were more sellers than buyers, so the price went down. But the mechanism for transaction was just fine. Right? Not so with Bitcoin. Right, the mechanism for transaction is going to go down when the value of the coin itself gets too low, and people haven't thought through this. Yeah,
no kidding. That is that like I haven't seen a lot of what you might call like regular investment people jumping on the Bitcoin bandwagon. So, do you think that's part of why is because it doesn't have this secure structure?
By regular, you mean sane?
Yeah, I guess.
Well, from the perspective of a regular investor, right, there are a variety of choices that they have that have different levels of risk and different levels of reward. And they will be thinking about a balanced portfolio that meets their investment goals. So they may have a riskier balanced portfolio if they're younger, if they have money to burn. They might have a more conservative balanced portfolio if they're older, or if it's a retirement in money, so they'll have limited funds and they want to play it safe, right? And in that balance, though, you'll have some balance of more speculative and more value-based investing. So value-based investing, you're buying something that will continue to have value, right, even if fewer people want it, right? So that's a safer bet, right? So, you buy General Electric. Yeah, General Electric stock goes ups and down, but there's a pretty good chance that even though it's had hit upon a rough patch, it's still going to have value. Right, it's a huge company, lots of customers, lots of income. It's a blue chip stock, right. And that's what makes stocks blue chip stocks. Is even if there's a problem, and sometimes a blue chip company goes belly up, you never know, but the risk is relatively low. And then you have the more speculative investments. You might have some gold in your portfolio or something like that, or you might invest in a third world currency. You might say, okay, Nigerian currency is something I want to bet on because it could go up really high, but obviously it could go down. Right. And then there's Bitcoin, which is at the far extreme. Right. So right. It is the most speculative. Now, any good investor will tell you that having some very speculative assets in their portfolio can be part of the right mix. Right. Because obviously it can go way up. Right. So that's the perspective of a rational investor, is that in a balanced portfolio, there is a role for highly speculative assets, and Bitcoin may be one of those. So are lottery tickets.
Yeah, that's right.
And you can invest in those. It's like, well, okay, put some lottery tickets in your portfolio.
Yeah, you got a chance.
Right. Well, exactly. See, with lottery tickets, because you can calculate the odds. The odds are against you. Same with, gambling in Las Vegas. With Bitcoin, the odds are obscured, but they're also against you. So it's like, why not lottery tickets? At least you know what the odds are. Right.
Yeah. Or if 1 in 8 people go to Vegas and come out ahead.
Just bet on those people, right? Bet on the 1 out of 8. It's like, there's a business model for you.
Yeah, that's right. Well, I've kept you a pretty long time, actually. I really appreciate it.
Sure.
Do you have anywhere? I guess Forbes is where your stuff is.
Forbes. Intellyx.com is our company site, and most of what I write about isn't this stuff, right? It's about enterprise technology, so digital transformation. I just wrote a piece on a retailer and their digital transformation. I wrote a piece on Neiman Marcus and what they're doing a few weeks ago, and I get a few thousand people for an article like that. But when I poke my stick at Bitcoin fans, I get tens of thousands, hundreds of thousands of views. So I'm going to do more of those, and that's on Forbes. So just come to Forbes, or just Google my name and you'll find my Forbes articles, or just look for who everybody's poking their stick at. It's probably me.
Yeah, from my perspective, I think that as a consumer protection advocate, like a skeptic who cares about people losing their shirt, I really gotta. I look at Bitcoin and I go, this is too good to be true. A lot of people are going to go broke if they invest too much. So yep. I really appreciate your articles, and I really appreciate your time.
Yeah, happy to help. This has been fun.
So that's it for the interview. I hope everyone enjoyed it and is having a great holiday season. You can check out the show notes at thebrainstormpodcast.com and our website, brainstormblog.net. Thanks to our financial supporters, Will, Aaron, Daryl, Destin Sucks, Lachlan, Lisa, Magnus, Michael, Nathan, Positively Skeptical, Rob, Stephanie, and the Utah Outcasts, as well as new patron, Bassett. If you want to join them and help the show grow, then you can do that at patreon.com/brainstormpodcast. You can normally join us live every second week when we broadcast live on brainstormradio.net, but we're done until after the new year. January 5th is our next episode, our live broadcast, and our guests are Keith and Jen from the Not Another Atheist podcast. Thanks to Jason Bloomberg for joining me. You can find more of his stuff at Intellyx.com or Forbes.com/sites/Jason Bloomberg. I'll put a link in the show notes at thebrainstormpodcast.com. The notes on brainstormblog.net are still a work in progress, and we are accepting invitations to help with that. I will negotiate a way to pay anyone who's willing to spend a little time helping us with those. Thanks to Dave for our intro music. Thanks to Alex Kuiper-Murdoch for doing the voiceover for the intro and some of our ads. And thanks to Jason Camo for our outro music. You can find his stuff over at aloststateofmind.com. All music played is either with permission or under the SOCAN license to play. For more information on SOCAN, you can check out the music license info page on our website, brainstormblog.net. Remember to give us a rating, a thumbs up, or a fave on your podcatcher of choice. Join our Facebook group, like our page, follow us on Twitter, share the show, and spread the word. Thanks for listening, and remember, the truth matters.
This is an opinion-based podcast. Each person on the podcast is responsible for their own opinions, and those opinions don't necessarily reflect the views of the rest of the panel. Any guests or anyone associated with the people on the podcast, such as spouses, partners, children, other family members, friends, or employers. No one person speaks for the podcast with the possible exception of Cory, and he doesn't speak for anyone else on the show. The Brainstorm podcast does not represent the views of our sponsors.
We just wanted to say thanks to everyone who listens to us, shares the show, gives us a rating on iTunes or Stitcher, or supports us through Patreon and Gumroad. We don't have a lot of interactions with our listeners, but what we have had proves that we attract some of the best people around. Smart, kind, and cool. An audience truly worthy of the titles hardcore and woo-free. Thanks for helping us make the world a smarter place.